Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of New York and London coffee markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, New York coffee. In the past, this market had been subject to two separate head and shoulders patterns. The first was a small December 25 to January 26 head and shoulders top, and the other was a more recent February to March reverse head and shoulders pattern. 2 weeks ago, prices broke up through the neckline extensions of both of these patterns, rallying up through the 50% Fibonacci line of the January 23 to February 25 move at 286.10, the May 24 to February 25 move at 310.80, and through the flatlining gold long moving average, currently 318 and 3/4, with last week pushing significantly out through the 50% Fibonacci line on November 24 to February 25 move at 334.80. This process caused the formation of a monthly key reversal up in June, and we also saw a separate new pattern being built, a pattern that has helped the rise in prices, a mid-May to end of June small reverse head and shoulders pattern for highlighted bright green neckline, which is currently 286.20, which ties in with the other necklines as well as the nearby 50% Fibonacci lines. I spoke about this pattern 2 weeks ago when I said, and I quote, "This latest reverse head and shoulders pattern has not been triggered as yet, but it's usually seen as a bullish pattern, though bearish continuation patterns do exist, so caution, but be aware of the possibility of further attempts higher." End of quote. Since then, prices have triggered the pattern and reached both the primary and secondary targets for this small reverse head and shoulders bottom. Additionally, the whole start of February to date action is also now a bump and run reversal bottom, with the market in the run phase, and as I said last week, and I quote, prices already reaching most if not all the topside targets. Just the late January high at 351.60 still remains, and this market may take its own sweet time crossing that T or dotting that I. End of quote. Well, we have reached that final target topside, and now prices are hesitating, even if the hesitation is due to one single thing, and that's the bright red mid-September 25 to date downtrend, currently at 354.5. This, to be honest, did not look to be that strong a resistance. It was only a 2-pointer formed early on, but after last week, well, it is now a 3-pointer, and to be taken very seriously. It also sets up the opportunity for a small, acute, late June to date uptrend, currently at 322.05, to be a small ascending triangle pattern. I can't set up targets yet as we are within it, but I can give some potentials. Thus, a primary upside potential would be plus 42.70 cents, and a secondary harder to reach potential be plus 61 cents, both after a confirmed break higher over the bright red downtrend. Meanwhile, a primary downside potential would be minus 26.85 cents, and a secondary harder to reach potential would be minus 61 cents, both after a confirmed break lower below the uptrend. The reason I set these out is I suspect we may have a break happening by the time I next commentate on New York coffee. There's something else I'd once again like to look at here, and this I'm indebted to Ray Bradbury for asking me about New York coffee 66 weeks ago. And I went at the time to my longer term charts, the monthly charts, where we can see some interesting insights. You see, on my monthly longer term charts, I noticed back then a pattern that had not been immediately obvious to me at the start of 2025. It was a multi-year 2012 to 2024 very large reverse head and shoulders bottom for bright red neckline on my monthly chart, currently 279.55. The break higher over this neckline reached its primary target on the upside and just about reached its harder to achieve secondary target. Then the market turned lower, and over the course of 2025 and now into 2026 has formed a very, very large double top pattern, an Adam and Adam double top based on that bright red neckline. Now, the market had breached and broken below this bright red neckline, and I felt obliged 5 weeks ago to lay out some targets below for this really, really, really long-term pattern. Thus, a primary target X will be down in the 184.90 zone, amongst the congestion of 2023 and early 2024, and the 2020 uptrend, which is currently 185.80, with a secondary harder to reach, much harder to reach target X1 down in the 132 zone, on top of the congestion from late last decade and the start of the 2020s, plus the shallower 2019 today uptrend, which is currently 132.40. Now, I've always said, please bear in mind that these are long-term, possibly very long-term targets below for this double top pattern, and that would be fine normally, except we have last month and now again this month moved up significantly back over the bright red long-term neckline, with something significant that I have warned about, a monthly key reversal up. As I said, we have already carried on higher in July, and that now puts at threat both target X and target X1 below. It is looking more likely now that I will wait until we close July off to fully comment, and maybe halt always looking at the longer term view. But it looks like the move lower below the bright red neckline is increasingly a very large false break. London coffee. 57 weeks ago, so over a year ago, I said of the bearish pressure in this market, and I quote, "They now have the overhang of the market from roughly 5,300 up to the year's high at 58.49." So we're over a year ago. And that's the end of sitting above, and that's the end of the quote. This overhang of bearish pressure and ammunition was important as it started back then to press down, magnifying the subsequent breaks lower. The main overhead resistance since then had been a February 25 today downtrend, since broken and now retired. However, the downtrend had enough of an impact with me back then that I drew a parallel bright red bear channel based around it, currently at 28.22 to 37.59. 2 weeks ago, this bear channel was ruptured and breached on the upside, but not fully broken. As though we have had closes over it, the market has still failed to fully let go of it, or its recent companion, which is the gold long moving average, currently at 38.48. This action nevertheless allowed me last week to lay out some new potential topside targets. Now, you may ask, Eddie, this has been quite quick going for you, given your usual conservative nature. But I would respond that right now I am confident enough in a high close, especially after last month's monthly key reversal up. I felt confident enough, even obliged, to lay out some topside targets for the break higher from the bear channel and cracking wide open that bear channel. Thus, last week I laid out a primary target X up in the 45.29 area, with a secondary harder to reach target X2 up in the 47.26 area. The market's actions since I laid those have been disappointing, but for now I will stay by those targets, as looking above we have limited resistances up at 41.68 to 41.87 area, and we really only start hitting some significant resistances over the April 24 high at 43.38 and the June 24 high at 43.95, and even then those do not appear to be that great. However, I would just remind you of my statement at the beginning of this commentary when I said, and I quote, "They now have the overhang of the market from roughly 5,300 up to this year's high at 58.49 sitting above," end of quote. One final feature, and it's a recent very relevant one. The action since early June has allowed me to draw a new pattern, an early June to date dark blue ascending expanding wedge pattern, currently 37.28 to 42.87. This is one to watch, as I suspect that in the short term this pattern may usurp the impact of the larger and longer term pattern. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.